Welcome. So, if you've turned on the news lately, you've probably been hit with a tidal wave of scary financial headlines. But, behind all that noise, the market might actually be telling a totally different story. So, today, we're going to cut through all of that and find the real signal. All right, let's get into it.
I mean, headlines like this, they're everywhere, right? They are absolutely designed to grab you, to make you feel that sense of panic, to make you think the world is ending. It's a really powerful narrative for the media, and let's be honest, a pretty profitable one too. So, is all this fear really justified by the facts? Or is there something else, something bigger, happening behind the scenes? That's the big question we're going to tackle today. We're going to peel back all those layers of fear and look right at the cold, hard data. Okay, before we even touch the market's reaction, we have to understand the giant geopolitical chessboard, because this isn't just random chaos. Nope, this is a very high-stakes game for global dominance. And energy, well, energy is the queen on that board. Think about it. The future, for sure, belongs to whoever wins the AI race. But artificial intelligence has a massive appetite. It runs on one thing: huge, and I mean huge amounts of energy. So the real game isn't just about technology. It's about securing cheap energy for yourself while making it way more expensive for your rivals. And this slide shows you exactly how that control is achieved. See, you don't need to control all the oil fields in the world. You just need to control the shipping lanes where everything has to pass through. We're talking about the Panama Canal, the Red Sea, and now the most critical piece of that puzzle, the Strait of Hormuz. So what happens when a massive piece of that geopolitical puzzle just clicks into place? Well, a whole lot of uncertainty just vanishes. And for the markets, less uncertainty always means less risk. Because the market can see this long-term strategic play, it can ignore all the short-term noise, and suddenly, the path for real growth looks a whole lot clearer. So we've got this strategic reality on one hand, and then we have these screaming headlines on the other. How do they actually stack up? Let's put the media's fear narrative to the test with some real financial data.
This was claim number one, right? The big one. The idea that any spike in oil prices, even a temporary one, was going to send inflation spiraling completely out of control. It's a really compelling story and, frankly, a scary one. But is it true?
Well, here's the market's answer: 2.56%. That's the average inflation the market is pricing in for the next 5 years. So, despite all those scary headlines, the market's long-term view, it barely even budged. No panic here at all.
And the second part of this whole fear narrative was that these events would just slam the brakes on the entire global economy. A surefire recipe for a recession, or so the story went. Let's see what the most sensitive economic barometer in the world had to say about that.
You can think of the 10-year bond yield as the market's heart rate monitor. It's incredibly sensitive. If it truly feared a growth crash, that yield would have plunged below the lower level. If it feared runaway inflation, it would have shot way past the upper one. And instead, it stayed right there in that calm, healthy zone. The market was basically telling us, hey, everything's fine.
Okay, so the bond market didn't panic. What about the stock market? Surely all that turmoil and uncertainty had to have caused a massive collapse, right? Well, let's take a look at what actually happened.
At the absolute height of the fear, I'm talking conflicts raging, headlines screaming, the S&P 500 pulled back a maximum of 7% from its recent all-time high. Now, just stop and think about that. A 7% dip in the face of what was being called a world-altering crisis. Is that a catastrophe? Or is that just, well, noise? And this right here is the VIX, the market's fear gauge. You can see that one moment of pure panic where it just spiked through the roof. But look how quickly it collapsed right back down. The fear was intense, yeah, but it was over in a flash.
So what does this all really mean? It means the market went through a quick, violent storm, not a permanent change in the climate. The fear created a massive spike in volatility, sure, but the underlying trend, the real direction, remained strong.
So the short-term panic turned out to be a bit of a mirage. But that doesn't mean there aren't real, long-term risks to think about. All of this geopolitical maneuvering, all this government spending, it comes at a cost. And it shines a big spotlight on a slower, deeper danger: the devaluation of our money. There's a name for this. It's called Argentinization. It's that point where you have to spend more time and energy just protecting your money from losing its value than you do on actually building your business or your career. It's that nagging feeling that you're working harder and harder just to keep what you already have. So, how do you defend yourself in an environment like this? You start looking at hard assets, things that can't just be printed out of thin air or easily debased. And that means equities in real productive companies, like you find in the S&P 500. It means timeless stores of value, like gold. And more, it means digitally scarce assets, like Bitcoin. Just take Bitcoin, for instance. While everyone was busy panicking about the daily headlines, the serious institutional infrastructure for it was quietly being built in the background. You've got sophisticated new products launching to help manage volatility, you've got clear regulations coming down the pike, which reduces risk, and now you have billions of institutional dollars pouring in through new ETFs. This shows you where the smart money is focusing for the long term. So, what's the big takeaway from all this? Well, one theory is that this huge wave of fear wasn't an accident. It was actually a tool used to shake out smaller retail investors, allowing the strong hands, the big institutions, to scoop up assets at a discount. In other words, it was a massive transfer of wealth happening right out in the open. Which, brings us right back to our main question. When the headlines are screaming fear, but the data is telling a very, very different story, you have to ask yourself, are you listening to the noise or are you actually looking for the signal?